Shocking exposure. Carney's plan to lock Canada into China's EV trap. Canada's snap federal election on April 28, 2025, brought Mark Carney into power as the new Liberal leader and Prime Minister, yet many Canadians are questioning who he truly represents. Farmers, workers, and everyday citizens feel increasingly neglected, while the government appears more focused on advancing corporate interests and strengthening economic ties with China than on protecting domestic priorities. Across key sectors, ordinary Canadians are feeling the consequences, from skyrocketing agricultural costs to ambitious electric vehicle (EV) mandates that may leave Canada dependent on foreign supply chains for decades. Farmers are among the hardest hit. Canola producers, for example, face devastating financial pressure. Fertilizer, machinery, and crop protection chemicals have more than doubled in price, while crop prices are falling under the combined weight of U.S. trade tariffs and a crushing 78% Chinese tariff. Many farmers warn that their revenues are now barely keeping pace with expenses, leaving them little to no margin for long-term sustainability. Despite these clear economic threats, Carney has remained silent, offering no public strategy to defend Canadian agriculture or challenge foreign trade barriers, leaving farmers to fend for themselves against mounting pressures. The federal EV mandate further highlights the disconnect between government policy and practical realities. By 2035, all new vehicles sold in Canada must be electric. However, the supply chain for key components such as lithium, cobalt, graphite, and batteries is overwhelmingly dominated by China. Even vehicles labeled as Canadian-built rely heavily on Chinese parts, leaving Canada dependent on a single foreign supplier for a sector critical to its economic and technological independence. Alberta's Environment Minister Rebecca Schultz has publicly rejected Ottawa's gas vehicle ban as unconstitutional and economically unviable, warning that the target cannot be realistically met without harming the provincial economy. Yet Carney and his allies continue to push the policy aggressively, raising questions about whether some government figures may have undisclosed financial ties to China's EV market. Financial connections deepen concerns about potential conflicts of interest. Carney's former employer, Brookfield, co-owns battery manufacturers and operates multi-billion-dollar transition funds linked to green technology initiatives. Under Carney's leadership, Brookfield secured billions in loans from the Bank of China to expand private enterprises in the country, explicitly targeting growth in EV and sustainable technologies. Additionally, Environment Minister Stephen Guilbeault's involvement with a Chinese Environmental Cooperation Council has raised questions about possible undisclosed stakes in Chinese supply chains and EV-related projects. Carney himself holds significant stock in Tesla and Rivian, suggesting a personal financial interest in accelerating EV adoption in Canada, even if the domestic market and supply chains are not fully prepared. Labor disputes reveal the same pattern of protecting corporate and elite interests over everyday Canadians. When Air Canada flight attendants went on strike, the government quickly intervened under Section 107 of the Labor Code, forcing workers back to work without fully addressing unpaid hours or fair compensation. Many flight attendants estimate losing roughly $11,000 annually due to unpaid labor, yet the government acted to safeguard corporate profits and stock prices rather than protecting employees. Brookfield's financial ties to Air Canada through Chorus Aviation further underscore why the government moved quickly to protect investor returns. This marks the sixth time Liberals have invoked back-to-work legislation under Carney, weakening the right to strike while claiming to maintain industrial peace. Meanwhile, broader relations with China remain a point of controversy. The government's reluctance to confront Beijing over tariffs, supply chain dependency, and strategic economic influence contrasts sharply with other global leaders. Critics argue that Carney's administration appears more interested in securing investment opportunities and strengthening ties with Chinese corporations than in defending Canadian workers, farmers, and industries. This perception is reinforced by his personal financial holdings in EV companies and the overlapping interests of allied corporations. The EV mandate risks locking Canada into a long-term dependency that could compromise national industrial and economic sovereignty. By tying domestic policy and innovation to Chinese-controlled supply chains, the government exposes the country to potential future disruptions caused by geopolitical tensions, trade conflicts, or market instability. For families, workers, and industries, this dependency could result in higher costs, fewer local opportunities, and increased vulnerability to global supply shocks. Public sentiment is increasingly critical. Canadians generally support environmental initiatives and technological progress, but they are wary of policies that impose financial burdens, risk national independence, or disproportionately benefit a few wealthy investors. Conservative leaders, including Pierre Poilievre, advocate for policies that protect domestic manufacturing, strengthen Canadian energy independence, and ensure fair market conditions that benefit both workers and consumers. Ultimately, Carney's EV strategy raises fundamental questions about motivation and priorities. While the policy is framed as a push for innovation and environmental leadership, the tangible outcomes may include long-term dependency on China, rising costs for households, and concentrated financial gains for investors, while everyday Canadians bear the burden. Ordinary citizens see a government that promotes corporate profits over public welfare, leaving families, farmers, and workers uncertain about their future. The April 2025 election underscores the tension between ambitious environmental targets and economic security. Canadians are being asked to embrace sweeping technological and policy changes without clear assurances of domestic benefit or industrial sovereignty. Critics argue that Carney's approach may compromise Canada's ability to independently manage key industries, leaving workers, families, and businesses vulnerable to global market fluctuations. Carney's policies, combined with the aggressive EV mandate and deepening ties to China, will influence Canada's economic and industrial trajectory for decades. The stakes are high. The country must balance environmental priorities with economic sovereignty, domestic industrial growth, and fair treatment for its citizens. The choices made now will determine whether Canada maintains control over its industries or becomes increasingly reliant on foreign powers under the guise of technological and environmental progress. The message to Canadians is clear. Carney's administration prioritizes profits for global financiers and corporate insiders over the well-being of the people who actually build, grow, and serve the country. From trade pressures to labor disputes, the administration's policies reflect a preference for elite interests over ordinary Canadians, leaving farmers, workers, and consumers to bear the consequences. The coming years will test whether Canada can reclaim its industrial independence or remain locked into dependency under foreign influence.